Hello, everybody, and thank you for tuning in today. My name is Dan Roda. I'm the co-founder and CEO of Abaca, and the topic of my presentation is Cannabis Banking 2020. We often hear the phrase hindsight is 2020. Indeed, this presentation will include a look back at what has happened to shape the landscape of cannabis banking and related services today. As the name suggests, we'll also be looking forward throughout this year, 2020 and beyond, to discuss what the future might bring for cannabis banking and related services. And so when we talk about cannabis banking in terms of a problem that needs to be solved, what we're talking about is this. We're talking about an industry that did 15 billion in legal sales last year, and yet less than 5% of the banks and credit unions in this country are serving the industry at all. Indeed, that figure is probably deceptively large, as it is said that only a few dozen, or in any event less than 100 banks and credit unions nationwide are accepting deposits from cannabis businesses in any significant way. And so as a result, today we are left with an industry that is 26% unbanked, which is a large number when you compare this against the national average of about 10% of citizens that are unbanked, and an even smaller number of businesses. However, it's nowhere near the 100% figure that you often hear thrown around in the media. In fact, if you look at the inverse of this number and look at it another way, 74% of cannabis businesses, that is to say almost 3/4, reported being banked as of MJ Biz Daily's latest fact book survey, which is a comprehensive survey of cannabis businesses across the country. And so you might be wondering how those businesses are doing it and why there's so much bad information out there. Well, that's what we're here to talk about today. And what it comes back to in a lot of ways is this very, very thin regulatory framework that dates to the end of the Obama administration, and at least with respect to the FinCEN guidance, has stayed in effect. So in 2014, again, towards the end of the Obama administration, the Justice Department released the Cole Memo, which set forth the administration's hands-off policy with respect to enforcing against states that had legalized some form of recreational or medical cannabis. At the same time the Cole Memos were released, FinCEN, which is a division of the Treasury that monitors financial crime, released its guidance, which I like to call the Magna Carta of cannabis banking. And so the Cole Memos set out these enforcement criteria, this list of very bad things that as long as cannabis businesses weren't doing them, the government wouldn't prosecute. The Abaca amendment actually stripped DOJ of funding to prosecute. And this FinCEN guidance told banks that if you can validate that these businesses aren't doing these very bad things, that's what we would like you to do in order to take their money. The regulatory framework became a little more complicated in 2019 after the Farm Bill at least apparently legalized hemp and hemp-derived CBD, although the FDA perhaps disagrees with that. And so the landscape for financial services in the hemp and CBD spaces is also somewhat complicated. But what's next on the horizon? We see potentially something like the STATES Act or the Safe Banking Act getting passed. In fact, in recent days, just this week and last week, in fact, we've heard of a push for the Safe Banking Act perhaps getting reinvigorated in Washington as a result of cannabis businesses being left out of the massive stimulus package that was recently passed as part of the CARES Act. We hear some lawmakers saying that they are going to push for including safe banking-like provisions in the next round to ensure this happens again. We've also heard talk from presidential candidates and others about a possible descheduling or rescheduling. And the fact of the matter is we don't know. What we do know is that cannabis and CBD banking is something that is going to remain a high risk and high compliance endeavor for the near future. This to operators also translates into a higher cost for banking and other services than you would otherwise expect to pay in conventional industries that didn't happen to have the misfortune of still being illegal under the federal law of the United States. This is because this regulatory framework that was placed into effect by this FinCEN guidance, this Magna Carta for banking the industry, commands that financial institutions, among other things, be able to demonstrate that cannabis businesses who are banking there are deriving revenue only from sales that are happening in compliance with state law. This is a difficult task when you consider that at a medical dispensary, for example, the average retail sale can be $120. Average dispensary can do 150,000 or more depending on the market. And so, if you were to ask Cindy Seafried, who is the CEO of the most prominent cannabis friendly financial institution in the country, just why cannabis banking is so expensive, she'll tell you that what you're really paying for are all the bodies it takes to file 7,000 reports. And that is true, and there's really more to it than just the reports. On top of the reporting, there's a legal and reputational risk that institutions face for serving this space. There's regulatory risk on top of that, and there are logistics considerations such as dealing with cash, such as performing site inspections, and of course the cost associated with doing all of this. So this is a very much an added cost endeavor for a bank to be willing to serve this industry. And despite all of that, the FinCEN guidance still doesn't provide a safe harbor. In other words, the guidance doesn't actually make it legal to bank the cannabis industry. This means that technically a financial institution that serves the cannabis industry is breaking federal law much the same way as an individual who gets a license to dispense or cultivate cannabis is also breaking the federal law. However, just like the operators know if they follow the state law and remain in compliance, that these guys here on the screen and the blue windbreakers aren't going to show up at their door, there are no known instances of a financial institution in this country having the blue windbreakers show up at their door either, simply for serving the cannabis industry. So in order to meet this regulatory burden and do it effectively, banks will hire compliance officers, in some cases lots of them, or they will supplement their work with specialty technology such as what we've developed at Abaca. And so what I've got on the screen now is my profile, let's call it, of a cannabis-friendly financial institution. These are the banks and credit unions across the country that are willing to, yes, break the law and take the risk to serve the cannabis industry. These institutions are typically state-chartered banks or smaller credit unions. For the banks, they're typically privately held, not publicly traded. The fewer owners that need to be convinced, the better. And any publicly traded institution that begins serving the cannabis industry is running an additional risk of getting sued by its shareholders. Typically, these financial institutions that'll serve the industry are under $1 billion in total asset size, usually well under, and they often have declining deposits or fee income, as is unfortunately the case for many community banks all across the country, although the CARES Act and the Paycheck Protection Program have certainly done something to reinvigorate national interest in the importance of that community banker. But the common thread among all of these institutions that are going to be willing to serve the cannabis industry is that they have an increased appetite for risk. Just like anybody who is an entrepreneur or investor in this space has an increased appetite for risk, again, because it is federally illegal. And so financial institutions, generally speaking, will break down MRBs, that's financial institution lingo for marijuana-related business. They'll break them down into 3 basic tiers. And it's important to know these tiers because, well, the vast majority of financial institutions will not touch a tier 1 MRB, which is to say a plant touching business like a cultivator, dispensary, infused product manufacturer, or processor. There are a lot more financial institutions out there who will touch a tier 2 or a tier 3. Tier 2 is the type of business where the majority of the revenue comes from those plant touching businesses. If you sell cannabis specific packaging or grow supplies, or a very specific seed to sale software solution that's really only used by cannabis businesses, or you're, let's say, a cannabis industry association like they have in many states across the country, you are probably a tier 2 MRB. The majority of your revenue comes from tier 1 MRBs, and you're likely also to have banking problems. However, what if you are a lawyer or an accountant or maybe the air conditioning repairman? You do get some money from these tier 1s and in fact tier 2s perhaps in some cases. So you are receiving revenue from the cannabis industry, but you're not plant touching. Well, there are some institutions that are willing to turn their back at some amount of revenue coming from the cannabis industry, even though they wouldn't touch you if you were plant touching. So as a tier 3, your options are a bit greater with respect to banking and other services. And when I talk about other services, I'm talking about the ripple effects here that impact a number of different areas. It's not just conventional banking or your standard checking account that's impacted by these issues. It's also payments. It's lending, it's insurance, bonding, payroll, and all kinds of other things. And so we'll drill down on a minute here for the landscape regarding electronic payments in cannabis retail. For hemp and CBD and ancillary businesses today, you can generally accept major credit cards, though it is still difficult to get through underwriting and get approved sometime, but it is not impossible. It is, most will agree, generally impossible for a plant-touching cannabis business to legally and fully transparently be accepting credit cards at the point of purchase, but there are a number of other payments options and solutions that have presented themselves in the marketplace in recent years. You've got app-based solutions, some old ones and some new ones out there. CanPay and PayQuick have been around for a while. We're also hearing of newer ones like HyperPay and PayTender. But then one of the other things that's been around a while is masking. That is where you simply lie about the nature of your business in order to get a merchant account. This isn't recommended because it's generally speaking considered fraud and will also result in random disruptions to your service, but it is common. We also see PIN debit or sometimes reverse or cashless ATM systems operating at the point of purchase in a dispensary. These are clunky, but they avoid the credit rails, so the logic is that they are a bit more compliant in that sense. There are some popular two-step solutions out there like gift cards and e-wallets and even cryptocurrency where the first step of a transaction is to load that gift card or e-wallet, and the second step is to settle in the cannabis merchant's account. These work for a while until they don't work, and so they often also have discontinuity issues. There are also some offshore workarounds, really don't recommend that, so I won't spend a lot of time there. But the bottom line is that significant disagreement does exist about the legitimacy of these various methods, and each one presents a different level of risk, but they are a means to an end. That specific desired end is to remove the cost and risk associated with cash from your business. And so this is something we see happening, and you need to make your own decision as an operator. We'll also talk a little bit here about lending in cannabis, which is another area of financial services that is difficult for cannabis businesses to obtain. Even prior to COVID-19, the public markets were slowing, becoming a more difficult place for cannabis businesses to get equity capital. And most banks, even the ones that'll open deposit accounts for cannabis businesses, are hesitant to lend in the space because it's just as risky as opening a deposit account, but you also have to deal with collateral and also some internal liquidity considerations. Finally, recently, we all discovered that most of the stimulus financing available through the CARES Act and the SBA is inapplicable to the vast majority of cannabis businesses, though some hemp and CBD businesses could potentially apply. There are also some state level programs that might be applicable to you, but generally speaking, the private sector is filling the void there as well. It's private lenders who are making real estate loans, factoring, really any kind of financing product that's being made into the cannabis space. In most cases, it's coming from private capital at this point in time. And so let's look a little bit here to the future where I will divide our possible realities into what I call half measures versus whole measures. If you look at a half measure, like the Safe Banking Act or the States Act, for example, I call them half measures because they continue the status quo and they don't actually involve a change in federal law. We think if one of these were to come to pass, you will see more deposit banks begin to get into the space, but compliance costs will remain, and the major credit cards and investment banks will stay out because it will still be illegal under federal law. On the other hand, if the president were to deschedule cannabis by executive order, either this president or a future president, or if that president or the Congress were to have it rescheduled, that would be what I would consider more of a whole measure. Of course, if it were to go to Schedule 2, as presidential candidate Joe Biden has proposed at various points in the past, that would upend the entire industry and place it in the hands of big pharma. So that's certainly not preferred in terms of outcomes by most on this call or most in the industry in general. Schedule 3 is perhaps a more appropriate home for cannabis, and if cannabis is rescheduled in Schedule 3, states will still need to change their laws to catch up, but Because of the national change in law, we believe this will allow the major credit card brands to relax their current prohibition on cannabis, and will also allow Wall Street to fully get into the industry. So it'll be interesting to see what happens and how the conversation has perhaps been changed. Like I said, cannabis businesses were left out of the current stimulus package, despite the fact that many states declared them essential. So, the conversation has taken some interesting turns lately, and we'll just have to see what happens next. So before I wrap up here, a quick word about Abaca. We are a fintech banking platform for cannabis. We link cannabis businesses to the financial institutions that want to serve them with things like bank accounts and loans and payment processing. We participated in the Canopy Boulder Accelerator back in fall of 18, and we are backed by Wilcan Capital and AFI Partners. And, Celia and Patrick said that if I did this presentation, I got to have an ask. So my ask for you guys out there is that if you know of any banks, lenders, or other strategic partners, we're always on the hunt for banks to grow our reach, and lenders and other partners. And if you can think of anybody we should be interfacing with, send them in our direction, please. We would really appreciate it. And if you guys have any questions, please don't hesitate to reach out. My contact information is on the screen, and I'm sure it will be emailed to you as well. Again, thanks for tuning in. I'm Dan Roda with Abaca, and we are solving cannabis banking. Thank you.